Hi, I'm Andrew Rowell, Director of Investor Relations here at Cannings Purple, and I'm joined by John Macdonald, Resources Analyst with Hartleys here in Perth. John, we've seen a lot of instability in the equity markets recently, largely driven by the US-China trade war or the threats of that. And I guess on the back of that, we've seen access to capital and access to fresh capital slowing down or even stopping in some cases, and that's shifting the focus to M&A transactions. On the gold sector, we've seen large transactions like the Barrick Randgold transaction, $6 billion merger on the table. I guess where are you seeing that going, both in gold price and transactions?
Well, the Barrick Randgold transaction is an interesting one. It's the first sort of big merger we've seen in the gold sector for many years, and it sort of harks back to the days when everybody was trying to grow, and that was the only theme in the market. So I don't know if we're at that point yet. I think the Barrick Randgold one was very much a diversification for Barrick. It's been the biggest gold producer in the world for a while now, and had to find an outlet or another way to expand its activities, and Randgold's a pretty good fit for it. So I'm not sure the implications of the wider gold market for it, but certainly it seems like there's an increase in activity through the rest of the sector as well.
Well, we've seen the Northern Star acquisition of Pogo recently, and I guess some other smaller transactions here. I guess who's next? We've got sort of the large scale, the Newcrest at the top of the pile, some junior explorers and miners at the other end.
Yeah.
Who you looking at as far as M&A transactions?
Well, it's interesting, Andrew. I mean, the theme of the past 2 years has been concentration of capital in that top end.
Yep.
So Northern Star has been accumulating cash. Regis has been accumulating cash but paying dividends at the same time. And generally the larger companies, the larger producers have been increasing their cash pile. So, but at the smaller end, in contrast, it's been very hard to get hold of capital, and there's been nothing really. It's been hard to raise it, and hard to borrow it as well. So they're finding their projects are ready to go, but with no cash to pursue them with. So one answer is to get use of the big company balance sheets, and we've seen Ramelius and Explorum. Ramelius making a bid for Explorum, which is exactly that model. And I know Explorum's not party to it, or not agreeing to the merger. But whether we'll see things like that progress in the future, there was a suggestion last week, Regis going for Capricorn, and that didn't eventuate. So Capricorn sits there as something that somebody might go again.
What about, I guess, the middle end, that sort of plus $1 billion market cap mark? Are they likely to, I guess, do a Barrick Randgold and kind of 1 + 1 = 3 type measure? Because we're seeing, I guess, PEs for the bigger companies tend to have a higher PE than the smaller ends.
Yeah, so two things have happened that have changed it very recently. So the first thing is a Northern Star bid for or acquisition of Pogo. So that put everything into stark relief because it was so well received in the market. They put on over $1 billion in market cap for a $200 million acquisition, or just over that. So everybody realizes at that end that if you make a right acquisition, you're going to get rewarded for it, and that the game is on as far as mopping up good assets in that lower tier. So Regis will be looking hard at lots of things. Evolution always the same. So Barbara will be looking for things to do, and they're all scouring through the mid-sector to find good acquisitions. So it's interesting times.
I guess, I mean, here at Cannings Purple, we've worked on over 50 transactions in the last 3 years worth, I guess, over $7 billion in combined value. What we're largely seeing now, and this is increasingly coming through, is, as we said before, that access to capital and funding is predominantly becoming that primary mechanism or primary reason for doing the M&A transactions. Is that something that you're seeing as well?
Yeah, we're keen to help companies get capital. So that's obviously something we're pretty closely focused on. And there's, getting the asset to a point, or getting the asset quality up to a point that you can raise capital in this market. There's a number of good, and also this morning, I mean, the gold price was up $20 an ounce in US dollar terms, which is a breakout for the last 6 months. So maybe we're at the point now where the capital will return to that lower end. And the other thing that I was going to mention was that AMI, Aurelia, its move from over the past 12 months, it acquired an asset, paid it off within 4 months, and that's moved it out from the smaller sector into the larger sector. So all of a sudden, the investment community is looking for other companies to do that as well, which could help re-rate those middle sector companies and send some more capital towards these smaller companies.
Are you expecting any, I guess, large deals or even sort of medium-sized deals this side of Christmas, or we're looking into next year?
No, it's very much dependent on the quality of the assets available. Most of the good assets are obviously concentrated in the bigger sector, and so whether they can get comfortable with some of the assets in the lower sector, that's pretty important. It'll take them some time, and it'll also take some time for exploration to lift their quality up. So we'll wait and see, but at the moment, it's just a watching and assessment game.
Excellent. Thanks, John.
Thanks, Andrew.
Yeah.